stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Two companies reporting earnings this week top the top picks list, with Nina Mishra and Shiraz Mian here to fill us in on each of them. And Nina, we're going to start with you. You have Microsoft.
Yes.
Great scores across the board for your
Right.
company.
It's a great company. So technology companies, the tech sector, did not participate in the post-election rally initially, mainly because of concerns related to Trump's immigration and trade policies. But of late, they have been doing pretty well. In fact, technology is the best performing sector this year, and particularly after Trump's meeting with the big tech leaders, these stocks have been doing well. And I remain positive on the sector because technology performs well when the economy is growing.
Sure.
And also Trump's promised repatriation tax holiday should be great for these big tech companies, because companies like Microsoft, they hold a lot of cash abroad which they can bring back and use for investments, M&As, and dividends and share buybacks. Microsoft has been kind of reinventing itself under the new CEO, Satya Nadella. They invested in their cloud computing business,
Yes.
Azure, in a very big way, and that is kind of paying off now. Revenues of that segment have been growing exponentially. They are the second biggest player in the space now, behind Amazon Web Services.
Didn't they also acquire LinkedIn?
Yes, yeah. They closed the acquisition last month, so that should also further enhance the value of their platform and also extend the reach of their products. So that is why that's the reason why analysts have been quite bullish on the stock. So if you go to detailed estimates page, you can see that estimates have been rising ahead of earnings scheduled for later this week. And the stock also has a small earnings ESP, which coupled with the ZAX rank of 2 suggests good chances of beating estimates again. It has a VGM score of A, which is very good, and a dividend yield of 2.5%, which is very good for a tech stock. And they have also been returning a lot of cash via share buybacks. So that is good for investors. And if they repatriate some of their cash parked abroad, so probably they will increase their dividends and share buybacks further.
And it reports on the 26th, of January. Estimates are rising on the company, so you got a great picture there.
Yeah.
Shiraz, you're talking about Chevron.
That's right.
That reports on the 27th.
That's
right?
on Friday. That's right, Friday morning. Let me quickly add on Microsoft. I'm a fan as well. I'm a fan of their repositioning strategy. The cloud is there. There is the Xbox. There is the LinkedIn. There's the Skype.
Yeah.
And they're totally moving away from their exclusive reliance on Office and Windows, which still remain big cash cows for the company. So an excellent story there. Chevron. It's not a cloud story. You could say it's a cloud story in the non-traditional sense, environment and all of that stuff.
It's an energy play, though.
Totally, energy play. It's a super major. The top 5 energy company, the Exxon, Chevron. You have BP, you have Shell, you have Total. I like Chevron better as a play, as a diversification play for investors who need to have a long-term exposure to the energy space in a relatively low-risk way. If you have the stomach for higher risk, we have plenty of picks for those folks. But for the general investor who does not have energy exposure, has been spooked by what happened in the space the last few years, I think Chevron offers the best risk reward. It has more upstream capital invested, meaning that the business in which they dig out oil and gas, they have more exposure to that business than the other 4 super majors.
I see.
And why is that important? It's important because if you have a constructive outlook for oil prices, meaning if oil prices are going to stay stable or rise over the next year or a few years, then a super major that has more tied up to that end of the business stands to benefit. Now, on top of that, Chevron has been doing an excellent job the last couple of years when oil was down to squeeze expenses out of its operations. They have cut out about $2.5 billion on a quarterly basis from their operations. And we saw the impact of that in Q3 and Q2 when oil prices improved a bit. It had a disproportionate bottom line impact, and we expect to see that in Q4 and beyond as well. They have cut capital expenditures. They plan to be cash flow break even this year, and they have a couple of super big projects in Australia tied to LNG coming on stream this year, which should be hugely beneficial to their bottom line. The stock did pretty good last year, up 40% or so, outperforming its super majors and most of its industry players. I don't expect that kind of a gain in 2017, but I would expect the overall momentum to continue. And on top of that, though most people don't really talk about dividends that much, but it pays a very juicy dividend.
Yeah, almost
close
4%.
To almost 4%.
Yeah.
And they have been paying this for years and years, and that's a core priority for the board of directors. So they'll protect it, whatever the situation is. I really like Chevron. I think it's a good long-term play for investors.
Good energy play, good for dividend investors.
That's right. You just keep it in your portfolio and forget about it. You don't have to watch it on a day-to-day basis.
Okay. Do either of you own either of these?
Yeah.
I have Chevron in the focus list.
Okay.
And I have Microsoft in the income investor portfolio.
But not anything
Not
outside of
personally.
the
Not
trading
personally.
services.
Yep.
All right, thanks for that. Don't forget, more information on these companies and others on our website, Zacks.com. Get on over to the homepage, link to it all from there. That's the starting point, Zacks.com. With Nina and Shiraz, I'm Terry Ruffalo.